What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this afternoon. So what we're going to be talking about in this video is we're going to be taking a brief look at that Ortex short interest and utilization data going into next week's trading week. We're going to do a little bit of options chain analysis to see if there are any price levels that we could see some more volatility at due to those market makers having to delta hedge those positions that they have sold. Now, the two main important things that I really want to cover are these two situations that are surrounding Citadel at the current time. The first one has to do with a division of Citadel's hedge fund branch, and they are letting go a significant amount of their portfolio managers at the current time. This is a very strange move to see Citadel making, especially with the current marketplace and how well their fund has been performing overall over the last couple of months and quarters. But it does kind of tie into what we've been seeing with the fact that Citadel's been going on this tweet storm and trying to essentially defend themselves from the basically claims that the apes have been making that are backed up by evidence. Now, the second thing is that tomorrow is a very interesting day. Tomorrow is the day that the lawsuit that Citadel is bringing against the SEC over that new order type, the D limit, is going to be heard by the court. So we're going to go over some of the key things that we need to keep a lookout for, exactly what this is, and why Citadel and a lot of these other market makers are really worried about this getting implemented into our current market structure. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and make sure you turn on that notification bell as well. So when we come over and take a look at this Ortex data right here, utilization 87.36%, and we are seeing that short interest, according to Ortex's estimate, currently at 16.39%. Now, as we saw over the last couple of weeks, these estimates also need to be taken with a very large grain of salt, because we did see Ortex pretty wildly overestimate what the actual short interest was according to the exchange at the current time. And again, this is not giving us the full market picture, but what it does tell us is, in short, the shorts have not covered their positions. This situation is very far from being over in terms of the short squeeze side of this investment. If the shorts haven't covered, in my mind, nothing has changed. Now, when we come over and take a look at Stonko Tracker and taking a look at the option chain going into next week, only 1,722 contracts in the money, which we've touched on before, with 94,163 contracts out of the money. But again, just like every week, we are going to see the open interest on the option chain start to tick up because of all of those people hoping that we're going to have another really substantial price run up during this next week, and they are going to be gambling on those weekly options. And again, do whatever you want with your money, but there is a very, very high degree of risk with trading any options, especially weekly options on AMC. Now, going over and taking a look at the actual options chain for this week, nothing is really jumping out at me at the current time, unless we're looking at this $50 strike where there's only about 8,000 contracts, and really we're not seeing a whole lot. So this week coming up, we're really not expecting to see any sort of substantial delta hedging from these market makers that could potentially push the share price of the stock going higher. Now, let's get into this situation surrounding Citadel. So when we come over here, Citadel jettisoned some staff in reshuffle at surveyor unit. So this is a division of the hedge fund side of their business. So Ken Griffin Citadel has dismissed several portfolio managers and analysts in a shakeup at its surveyor capital unit. More than a half dozen portfolio managers and even more analysts have departed since Philip Lee took surveyor's reins in May, according to people familiar with the matter. The restructuring included cutting several teams, hiring new ones, and asking some employees to relocate. The departures in the stock picking unit follow others from earlier this year. At least 13 of surveyors, roughly 27, so almost half of all of their portfolio managers who run their own trading pods, have exited since January. In turn, the unit hired 10 new portfolio managers, with most joining after Lee took over. So this is just a weird thing to see. So when we go a little bit deeper into this situation to see how much money this Surveyor unit is actually managing, well, we see right here, Surveyor Capital, a division of Citadel, the AUM assets under management, about $35 billion, but Citadel's total assets under management is around that $48 billion mark. So it is kind of difficult to tell that what we are seeing in terms of the data that we get from these 13F filings and whatever these different reports are telling us are actually factual. But what we do know is that that Surveyor unit is going to make up a very significant part of their business, because we can see right here within equities, there are three distinct businesses: Citadel Global Equities, Surveyor Capital, and Ashler Capital. Both Surveyor and Ashler have been doing some big recruiting on different sites of the Atlantic. Now, it also goes on to say that Surveyor is one of the larger portions of Citadel's business. So when we go back and see exactly what they're doing, so think about how much money that they are managing. They are just randomly firing a bunch of people and trying to get new people in to learn Citadel's workflow and systems in a short period of time to be able to manage all of this money and train new people. This is a very drastic move. And when you combine this with the fact that Citadel has been so outspoken recently on Twitter with that big Twitter storm where they were calling out essentially everything the apes have been saying as a conspiracy, there is really something going on here behind the scenes, and it is not looking good for Citadel at the current time. Now, when you combine this information with the lawsuit tomorrow with Citadel, it's still really not looking good for this institution. So Citadel Securities, which provides trading services to asset managers, banks, broker-dealers, and hedge funds, has sued the SEC over its decision to approve a new mechanism for trading stocks at upstart exchange operator IEX Group. The SEC failed to properly consider the costs and burdens imposed by this proposal that will undermine the reliability of our markets and harm tens of millions of retail investors, a Citadel Securities spokeswoman said in an email on Friday. Now, this is an old article that just basically tells us what this lawsuit is over. This came in October of 2020, but the court hearing is going to be happening tomorrow. The lawsuit, which was filed on Friday and reported first by the Wall Street Journal, increases Citadel Securities' dispute over IEX's D-limit order type. Now, Citadel is not the only institution that is really upset about this new order type, and the reason is the D-limit is designed to give traders a way to buy or sell stocks at the exchange while protecting them against unfavorable price moves. Now, what types of unfavorable price moves are we looking at? Now, I want everybody to really understand what is going on in our markets and why this new D-limit order type, if it is really adopted widely in the markets, is going to hurt these market makers in a big way, because it has to do with essentially combating high-frequency traders. Now, these market makers in large institutions are utilizing high-frequency trading to essentially front-run a lot of these trades, make a fraction of a penny on these orders that they fill, and continue on with their day. Now, if this limit order is going to hinder their ability to do that, that is really going to put the handcuffs on these institutions in terms of their business model. So the discretionary limit, D-limit, behaves like a regular limit order, except when the IEX signal, the crumbling quote indicator, or the CQI, predicts the price is about to change. This triggers the D-limit orders to automatically reprice to 1 MPV minimum price variant for 1 penny for most stocks outside that level. So what it is essentially doing is that if you have a sitting or standing limit order and the exchange is predicting that the price is going to move in a certain way that suggests that high-frequency traders are really getting a hold of the price, then they're just going to change these limit orders in order to not feed into that system. This is a really solid thing that we have in one of the ways that we are seeing changes in our markets, but we do have a long way to go. So the SEC has already approved this, and Citadel and a couple of these other market makers are really upset about it. Now, it's going to be very interesting to see the arguments that Citadel is going to be bringing in this lawsuit against the SEC. So that is going to be something that we definitely need to take a look at going forward. But that is going to be it for this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.